Hi, good evening everyone. I'm Ziqi, dealer at the Corporate and Institutional Sales. And together with my colleague Ming, we will be presenting on this month's webinar. Has the market lost its mind? Making sense of the divergence between Wall Street and Main Street. Now, before we start, if you have any questions during the webinar, feel free to use the chat function to post your questions. We will take your questions at the end of the session. Now, if you have been keeping track of the news, you wouldn't be unfamiliar with such headlines. US April unemployment rate rose to 14.7%, 20 million jobs lost in April, and all jobs gained since the Great Recession has been wiped out. Additionally, the IMF has forecast the global economy is expected to shrink by more than 3% this year, which is the steepest slowdown since the Great Depression. And with the most recent weekly jobless claim last week, the total filings during the coronavirus pandemic has rose to 38.6 million. We have very bad and bearish news from jobs data. However, the market has recovered about 30% from the March 23rd low. So what has happened? This brings us to our topic for today. Okay, so for today, firstly, I'll be going through with you the US market economic data, followed by how the stock market has performed. Secondly, I will explain the divergence between the Wall Street and Main Street. And thirdly, I will explain what are some actions that we as investors can do. Following that, my colleague Ming will be going through with you some technical analysis, and last but not least, we will have the Q&A session. Now, for US, for the unemployment rate, in April, the non-farm payroll employment has fell by 20.5 million, and the unemployment rate had rose to 14.7% as compared to just 4.4% in March, which is a huge jump. And out of the jobs lost, the leisure and hospitality sector have the biggest loss. And also the US GDP has plunged by 4.8% in the first quarter. And do bear in mind that during the first quarter, US only have about 2 weeks of lockdown, and things are expected to be much worse in the Q2 GDP. So you might ask, so what if the unemployment rate is bad and people are losing their jobs? Okay, so when people lose their jobs, they will have less spending power and they are going to spend less on products. And besides that, there might be more defaults on credit card and mortgage loan. This has been reflected by data as the retail sales in April plunged by the record of 16.4%. Now, bear in mind that the US economy is largely driven by consumer spending, accounting for about 70%. Now, with people spending less, this could lead to more business being closed down. And as more businesses close down, this could lead to even more job loss. So this could lead to a vicious cycle. Now, to show you the scale of the unemployment rate and jobs loss, we will take a look at the charts. Now, from these two charts, on first glance, you might think that there might be some error on the chart, but no, there isn't any error. Now, from chart 1, you can see how sharp the unemployment rate has jumped, and from chart 2, you can see the drastic fall in the non-farm payroll. The huge spike reflects how bad and adverse the unemployment rate and the job loss situation is. Okay, so now we will try to understand what is happening on the macro level. On the monetary side, we are having low to negative interest worldwide, with the US Federal Reserve having an interest rate of 0 to 0.25%, and ECB and Bank of Japan having negative rate, negative 0.5 and negative 0.1. And recently, the US President Donald Trump has tweeted that as long as other countries are receiving the benefits of negative rate, the USA should also accept the gift. Big numbers. Are we going to see negative interest rate in the USA? Now, just 2 weeks ago, Warren Buffett has sold off the bulk of his banking shares. Could he be foreseeing a negative rate in the US? Now, after understanding what is happening on the monetary level, we have to understand what is happening on a fiscal level. Now, due to the COVID situation, government worldwide has come with huge fiscal stimulus. For the US, they are going to have unlimited quantitative easing, which include the Fed buying corporate bond ETF for the first time. And also, they will have expanded repo operations as well as the CARES Act and Paycheck Protection Program to help protect jobs. Now, the total amount of relief package passed has amounted to about 2.8 trillion. And early this month, the US House has passed another 3 trillion relief package. Now, you might ask, with low interest rate, has the Fed run out of bullet? Now, the Fed has signaled in recent interview that they have unlimited tools to help the economy. And also, they are prepared to do whatever it takes to stimulate the economy and to prevent the very worst outcome. And this is a very important and positive signal to the market, as this signal that the Fed is prepared and ready to provide more help if needed. Now, due to the unlimited QE, the Fed balance sheet has reached US 7 trillion. From the chart, you can see the huge spike in recent months. Now, after seeing how major US index have performed given the bad economic data, and there is an old Wall Street saying, sell in May and go away. So let's see if that applies for this month. Firstly, we have the S&P 500, where the underlying ETF is a SPY. It has fallen about 34% from the peak, and it has rose about 33% since the March low. Next, the Dow Jones Industrial Average, where the underlying ETF is DIA. It has fallen about 37% from the peak and rose about 34% since the March low. And last but not least, the Nasdaq, which has fallen about 30% from the peak and rose about 36% since the March low. And some of you might know that the Nasdaq has actually outperformed both the Dow Jones and the S&P 500. So what has happened? Why did the market went up despite all the bad macroeconomic data? Has the market really lost its mind? This brings us back to our topic for today, making sense of the divergence. Now, firstly, there is a reopening of the economy. Starting from late April, Europe, China, and Hong Kong has started to ease the lockdown situation, and China has started to resume back life before the COVID situation, and domestic travel has started to begin too. And early this month, when Shanghai Disneyland reopened, within about 15 minutes, all their tickets were sold out. And for the US, President Trump has stated that vaccine or no vaccine, we are back. And as of last week, all 50 US states have started to reopen their economy. Now, as you can see from this picture, even as people have to wear masks when they go to Disneyland, they are not deterred and they are ready to go out when the economy has reopened. So right now, I would like to know about your opinion. Without a vaccine in place, will you be traveling overseas this year? Next, the market expectation of earnings. Now, it is widely expected that companies will have a bad Q1 earnings. And besides that, when companies report their earnings, most companies will have withheld their guideline for the year. Hence, now, because everyone is expecting a bad Q1 earning, there isn't any huge negative surprise when companies report their earnings. The huge plunge in share price from end February could have already factored in the bad earnings. And also, with such a negative outlook, any slight improvement or statement from the management can be seen as a bullish news by the investor. And bear in mind that the market is forward-looking and they're willing to look past the bad earnings due to the COVID situation. Investors are more concerned about the forward outlook. Next, there is a huge expectation for vaccine. Currently, we have about more than 100 vaccines under development, and 8 of them are currently tested in human clinical trials. And so, whenever there is a positive vaccine news, it can cause the market to rise quickly. Just last week, when Moderna announced the positive news on the vaccine, this triggered a huge rally in the index, where the Dow Jones rose about 900 points. And just yesterday, Novavax announced the phase 1 trial, and this caused the Dow Jones to go up by another 500 points. Hence, people are very confident that a vaccine can be found soon and any positive news can push out the market easily. Next, the tech stock weightage of the index. Now, Apple, Microsoft, Amazon, Google, and Facebook, they made up about 20% of the S&P 500. And together, they have accounted for about 24% of the S&P total point gain since the March low. And during earnings season, most of them have reported fair to good earnings despite the COVID situation. Hence, the huge run in the US index can be attributed to all these tech giants. And not surprisingly, given the strong tech sector performance, the Nasdaq has outperformed both the Dow Jones and the S&P 500. Now, from this chart, you can see that tech stock has made up an increasingly more weightage of the S&P 500. Whereas, comparatively, you compare sectors like the banks, the financial, the energy, they are only about 10% or less. So, given such bad economic data and the fact that the stock market has run up so much since the March low, so what we as investors, what are our plans moving forward? I think this is one of the main reasons that you guys have tuned in to know what are the action plans, given that the market has run up so much since the March low. Now, firstly, we must avoid FOMO, the fear of missing out. Because you see that the market has run up so much, you might fear that you might miss out. You might want to chase some stocks. Now, it's okay if you want to chase some stock to take a few trades here and there in the short term, but do bear in mind to have a cut loss plan. It's better to suffer a small loss as because all big losses, they come from small loss. You can always re-enter back when the trend starts to turn again. Now, while we wait for the market to retrace, we can keep a watch list of strong performing stocks. So you might ask, what are some of the things that I can look out for strong performing stocks? Firstly, we can keep a lookout for stocks that have risen or have fallen less relative to the market. And also, as you expect the economy to reopen, we can look out for some turnaround play. And secondly, we can keep a watch list of companies that have reported good Q1 earnings or even given positive outlook for the year, because most of the companies have withheld their guideline for the year. So we must keep a lookout for companies that have defined the odds. Okay, so what are some examples of these stocks? Now, for the large cap, we have things like Amazon, Facebook, Netflix, and Microsoft. Now, I'm sure most of you staying at home now, you wouldn't be unfamiliar with Netflix, as people stay at home and they would subscribe to Netflix. And for some growth stock, we have things like Sea, Slack, Shopify, Square. Now, Sea is the company which owns Shopee, the online shopping platform. And I'm sure many of you here use Shopee to buy stuff like your mask or whatever grocery that you need at home. And Shopee is a very popular app in Singapore and Southeast Asia. And as we expect the economy to reopen, we can keep a lookout for stocks like Disney, MGM Resort, Wynn Resort, Hilton. And yesterday, these reopening stocks has run up quite a fair bit. Now, if you don't have time to monitor individual stocks and if you are busy with work, but yet you still want to be exposed to the stock market, you can keep a lookout for some of the sector-based or tech-focused ETF. So what are some examples? Firstly, we can take a look at CLOU, which is the Global X Cloud Computing ETF, and as well as SKYY, First Trust Cloud Computing ETF. Now, these two ETFs will allow you to gain exposure to the rise in cloud computing. And next, given the COVID situation, there is a rise in e-commerce. And so we have the ETF EBIZ, the Global X E-commerce ETF, which allows you to gain exposure to the rise in e-commerce. Now, if you are unsure which tech sector to gain exposure to, but yet you still want to take advantage of the rise in tech, you can just buy the QQQ, which is the ETF which tracks the Nasdaq 100 index. Now, if you have bought this since the March low, you will be very comfortable with about 36% gain. Now, to conclude, while there is a divergence between the Wall Street and Main Street, given the current macro climate of low interest rate worldwide, backed by huge fiscal stimulus by the government, and also the market optimistic expectation of the reopening of the economy, as well as vaccine expectation, perhaps the market did not lose its mind after all. And I hope that the reasons that I have given to you, the reopening of the economy, vaccine expectation, pricing in of bad earnings, and the tech stock weightage of the index have allowed you to make some sense of why the market has went up despite the bad economic data. And do bear in mind that we as investors, we must not force our macro outlook on the market, and we must trade according to the price. Because the market is forward-looking, hence we must also look forward and think forward. So moving forward, what are some of the things that we have to be mindful of? Firstly, could there be a rise in US-China trade tension due to the COVID situation? Or could there be a second wave outbreak? And due to the COVID situation, could we have a new normal where most people will be working from home? So I'm sure most of you are working at home right now. So have your company have any guideline that some of you might be able to work from home permanently? Companies like Twitter, Square, and Shopify have said that they will allow their employees to work from home permanently. So could this be a new normal? And could we have the rise in new economies such as cloud computing, e-commerce, e-gaming, or sector like software as a service? Now, before I pass on my time to Ming for the technical analysis part, let's have a final poll. Okay, let's have a final poll. So I want to know what you think. Where do you think the market is heading? Are we going to test all-time high? Or given a huge rise in the market, are we going to just consolidate sideways? Or the or are we going to retest the March low? Or we are going to head towards a bear market next year? Okay, so right now, I'll hand over my time to Ming for the technical analysis part.
Okay, thank you so much, Ziqi, for the presentation on the market outlook. I will be touching on the technical analysis part, but before that, so let me just share with you some brief features and promotions that we have. And right here, you can see that we have a post-webinar feedback form, which you can take some time to fill up at the end of the webinar. So just give you the link for you to scan. The link will be provided in the chat room shortly. Just give me one moment. Okay, chat. So, do post your questions in Q&A if you have any. We will try to answer them at the end of the webinar as well. And yes, we will be showing you the outcome of the poll as well later on. Okay, but first of all, let me just go through with you some of the features that you have. If you have not have this account, we have a Cash Plus account that is ongoing since the beginning of this year. Okay, so all custody accounts can be converted into this Cash Plus account at a lower cost for trading. Okay, as you can see in this picture here. So do visit our website for more details. You can also reach out to your trading representative to find out more information. Okay, so with regards to the account questions, we will try not to answer them here. Most of it can be found on the internet. If you're not sure, just reach out to your trading representative. Okay, for those that is trading on the foreign markets, we have the complimentary live prices codes for these markets. Okay, so what you can do is you can actually log into the platform and head over to the reward section and just subscribe for these live prices. If we have time later on, I will share with you on how to do it briefly. If not, you can also contact a trading representative for more information. Okay, so US live prices for the three markets, do subscribe to them for the live prices. Of course, some terms and conditions will apply. So just look through the form to fill in. Okay, and for those of you that have not have not seen this before, okay, we do have some market journals that we are updating periodically. Okay, so back in March, before this bear markets happened, our dealer from the night market, Alan, actually posted on the 3 possible scenarios of the COVID-19 outbreak and its impact on US market. So he listed up the 3 scenarios that may happen. Okay, so you can find out more information from the website as well. You can see it under education from the homepage and then my market journal. So there are a lot of other articles there as well. So do take some time and you can find out more information there. And lastly, for those that have not invested in Europe, we have actually invest in Europe webinar. Okay, the topic will actually is actually called From East to West, Investing in Europe During the Pandemic. And this is actually an external webinar, and the link and the QR code is here. So it will be happening on the 4th of June 2020. So it's next week only. Okay, at 3 p.m. Singapore time. The duration is for 1 hour. So I think it's being held by the panel of speakers. So if you have time, please take some time to actually tune in and to find out if there's any investing opportunities in Europe. Okay, I will post the link shortly in the chat room as well. Okay, so just give me a moment. Okay, so for those that are using the Zoom webinar chat function, please do not use that because we are not tracking that. You have questions, do post it on the Q&A. and we will answer it there for you. Okay, the chat is not actually monitored as of now, so do post your questions in the Q&A. Okay, so right now I'll be covering on the TA part, technical analysis. Okay, for those investors that do not know what does TA stands for, it actually stands for technical analysis. And for those that already know, yeah, I'll be sharing with you on some charts. So TA is basically just looking at the charts and trying to predict or trying to understand what is happening, the behaviors of buyers and sellers in the market. Okay, beginning of the webinar, I actually shared with you that there is a pre-webinar feedback form where you fill in, and I can actually get a sense of what the clients are actually looking out for, which companies that they are looking to have some analysis on the technical perspective. So right now I'll actually be sharing with you on that. Okay, so give me a moment. Let me just bring out the chart for you. Okay. Again, you can see from the slide right now, there is a post-webinar feedback form. Yeah, so do take some time to fill up, and so that we can improve for future webinar as well. One moment, please. Okay, so the first one that I'll be going through with you today is actually on the S&P 500. Okay, so usually what I will do is I will go for a longer time frame. Okay, so I'll go for 5 years, and then by the way, this is our platform, PhillipCapital 2.0 live chart. For those that do not know how to enter, I'll show it to you later on. So, but right now, let me just explain to you on the S&P 500 chart itself. Okay, so this is the 5-year chart. What you can see is clearly there is it is an uptrend before this huge movement down back in March this year. Okay, so there was talks on whether it's a V-shaped recovery or is there a continuous bear market, or is there a shakeout, etc. Okay, so from the chart, let's take a look at what actually happened. Okay, back in March, early March or late February, sorry, mid-February, the market actually peaked. Okay, so at this price, it went down. Okay, so some indicators that I like to use here is actually on this thing called a Fibonacci retracement, as well as the moving averages, and also the relative strength index. Okay, so for those that knows how to use it, then yeah, just try to follow on. Okay, so the uptrend is actually broken from here back in March. So what happens afterwards is more interesting. Okay, in a longer term perspective, you can see this is the 200-day moving average. Okay, EMA, I believe, is 3. Yes, EMA 3 is the moving average, 200-day moving average. Okay, as you can see from the chart, it's actually providing a good support and resistance level in a longer time perspective. Okay, so in the near term, what we are seeing is actually something very interesting. The prices have actually crossed the 200-day moving average. Okay, so this downtrend has turned into an uptrend. And in the near future, what we can expect is that there is a possibility that this may continue to go up and test the all-time high. Okay, because the 200-day resistance has broken just recently. As you can see here, it has formed a support previously. Right now, this didn't hold, it broke, and then it went all the way down 30%. Right now, it has recovered and rallied up and broke the 200-day resistance. Okay, the change in trend can be confirmed using the 20 and 50-day moving averages as well. From here, we can see it has crossed back in mid-May, just last week or 2 weeks ago. And so investors have been struggling to understand whether if this is a resistance and may just retrace. So what we can see clearly from the last 2 days and yesterday's action is that it has broken, and so this momentum may continue and rise up to hit retest the all-time high at least. So if it forms there, I mean, we can take a look at a later timing. So right now, in the short-term perspective, I expect prices to continue to go upwards. Okay. And in Fibonacci retracement, as you can see, actually there's a few levels that we can take note of. One of it is actually the 32.8 and 61.8%. Okay, so the retrace back at this level, it didn't hold, it held 2 times, but afterwards it just broke through. So this point has been invalidated already. Okay, for now, RSI is actually not showing anything. So we do not use that. So the moving averages and also the Fibonacci retracement actually provides a very good picture on where the market is actually heading. So we don't talk about the news. We just talk purely on charts itself. Is that it's going to, it looks like it's probably going to go up further. Okay, at least in the near term. Okay, so that is for SPY. Okay, the next one a lot of investors are interested in is actually Alibaba. Okay, so let's take a look here. Okay, Alibaba here. Okay, same thing. Let's go 5 years. This is 5 years chart. Okay, there was a trend line here. I use these 2 points, but I believe there is actually a better trend line at the moment. Okay, we go for a shorter perspective of 3 years. Okay, right now I feel that this trend line is actually more, is much stronger, in fact. Sorry, give me a moment. Never mind, let's delete it. Okay, let's use this parallel line instead. Okay, so what I'm doing here is actually I'm drawing a trend line. Okay, a parallel trend line. Give me a moment. Okay, around this level is actually pretty good. Okay, let's take a look here. Okay, so we can see that this trend line has been tested a few times, at least 5 to 6 times. So this trend line is what we deem as pretty strong trend line. Okay, let's draw it a little bit longer. Okay, it's trading within this channel for the past 1.5 years to 2 years at least. Okay, so back in November 2018, it started, and right now the crash happened at this period, and actually it was supported by this trend line. So this was actually a pretty good entry, and you can see a lot of buyers actually held on to the price here, and eventually it managed to push back up. Okay, a higher low is in place for a trend line. Okay, so moving averages, you can see here is a consolidation, but actually the uptrend is generally still intact. Okay, give me a moment. Let me just zoom out a bit. Okay, yeah, 3 years trend line. Okay, so moving averages didn't really cross 20-day. Sorry, the 50-day did not cross the 20-day moving average in the short term, in the last 6 months at least. So we can deem it as actually the uptrend is still intact for Alibaba. Okay, and for the point on where to enter, right? We can look at this trend line, but it's a very long trend. It's a very long-term trend line, so it may take some time before it actually retest this trend line. And there was some news recently on US market going to delist Chinese companies. So it resulted in a big movement for the past couple of days. Okay, so we will need to see where it actually moves. Right now it's in the middle. I mean, in the middle, it doesn't really shows any of any movement that we can predict at the moment. Okay, in fact, RSI also is inconclusive. So using trend line, I would suggest to actually wait to nearer to the trend line to actually enter. And also, of course, to the top, you can see that this may not be that good. So, but fundamentally, Alibaba also is a very strong company. So that may be things that you may consider. Okay, and one more counter that I will be sharing on. Okay, it's Tesla. Okay, I will just share on 2 more, Tesla and also on Gold, GLD. Okay, okay, for Tesla, this is quite a huge movement, a very volatile company, very volatile stock. Okay, so you can see that it peaked in January, February, then retraced all the way with the market in early March, late February, early March. Okay, and just 2 months ago, I also mentioned about this company. I said that there was actually a very good resistance support at this region, $380. So and then it went all the way back to this current level. So okay, fundamentally, I believe this is actually very hard to use TA to predict its movement because it's very volatile, and it may not be very accurate using TA. And okay, near term wise, in fact, sorry, for the past half a year, we are still looking at an uptrend intact. Okay, the 200-day moving average is still pretty far away from the current price. So if you are using moving average to use it, maybe you can stick to the 20-day moving average. You can see that the movement here. Let's take a look. Let's zoom in here. Okay, you can see the movement here. This was, I believe, this was when Elon Musk actually tweeted on the price being overpriced. So huge movement, so very volatile in terms of news. And apparently investors didn't care, and 20-day moving average held as a support for this company. And moving forward, okay, fundamentally this is quite hard to value it. Okay, so in terms of technical wise, just beware that it may just retest the all-time high, or in fact the $1,000 level may be a round figure psychological number that investors may be wary about. Okay, so in terms of short-term movement, you may really want to zoom down even further into hourly chart or etc. Let's see if hourly chart, if there's anything that we can talk about. Give me a moment. So the chart is loading. Okay, so if you have any questions, feel free to use our Q&A function to post your questions there. We will try to answer as many as we can. Okay, but you can also reach out to your TR for any account related matters. Okay, so hourly chart, let's take a look. Okay, so this was the movement then. The tweet happened, and there is not much that I can mention here for Tesla, except that you can see a consolidation over the past few days. Even though the market has rallied, but Tesla, actually, we can be certain that this is the resistance that we can expect, 840 level. Okay, the very near term resistance that we can expect. Quite a lot of sellers will be there. Okay, but generally in long term wise, do be careful when you trade this counter because it is very volatile. Movements is huge. Okay, and now moving on to the last one that I'll be sharing for today, gold, GLD. Okay, so GLD, it's in trading in Amex. It's NYSE MKT, they call it. Okay, for the 5 years chart, let's take a look. Okay, so overall, from back in 2016, this has actually been, in fact, from the mid of 2018, gold has been on an uptrend. Okay, and with coupled with the fact on fundamental and how the Fed is reacting to the market. Okay, so we need to know that gold has usually been a hedge for inflation. Okay, or rather a hedge against the market. Okay, so it's actually going to be, in the short term wise, right, the uptrend is very strong, and we are going to expect gold to continue to outperform and going to increase even further. Okay, let's take a look if you can see any previous high, 10 years ago. Okay, so now we can see back in 2012, when stock, I think gold price was around 1,900. region. So we can expect it to hit there. Okay, about this level first initially. Okay, so right now it's about at 160. We have probably another 7% to 10% price movement that we can expect in the near term. Okay, with what the Fed is doing, very highly likely this trend is likely to continue, and it's going to be a good hedge for your portfolio as well. So you can diversify your portfolio with the stock market as well as gold. So you can see moving averages here is actually all pointing upwards, and relatively it has been strong to hold the uptrend and bearing the crash previously. But looking at it right now, on hindsight, it's actually not that much of a big movement. It is still supported by the 200-day moving average. Here, let's take a look. Right here, okay, it was supported at the 200-day moving average. It then had a clear breakthrough, and it continued its uptrend. Okay, so maybe what you can do is you can use the 20-day moving average, okay, as a near-term support, and long it. Of course, this is an ETF. You need to complete the forms necessary. And yes, in terms of a long-term proposition, this is gonna be pretty good as well. Okay, entry price, I will suggest using the moving averages as the first one. You can enter a little bit of your size on the 20-day moving average, which is around this level. And then afterwards, you can use the 50-day and the 200-day to enter more. So position sizing to balance out your entry price. Okay, RSI, you can see it's very difficult to hit. Even back then in the crash in March, it didn't really hit to the oversold region, so barely touched. So using the moving average in the near term will be more effective in that sense. Okay, so fundamentally it's also very strong, like I say, supported by the facts of what the US government is doing and the Fed is doing. So for that, I would have come to the end of the technical analysis sharing. Okay, right now I will share with you on we will proceed on to the Q&A shortly. Give me a moment. But first of all, I promise that I will share on the poll. Okay. So, okay, right now, the poll results for the vaccine in place. Will you still be traveling? Okay, why do we ask this question? Because we like to get a sense of how investors is actually going to start spending on travel and how this will actually impact the travel industry. As you can see, majority of our audience here, of our clients, is actually going to think of traveling in 2021 and possibly after the vaccine is developed, when it's much safer to do so. So actually this point reiterates the point that what is showing on the travel industry is just because of what we as a spender, as a what's that called, retail spending, right, is going to be affected because of what we think. Okay, so vaccine is developed, it may take a while, at least until the end of the year, and then before we can see any returns in the fundamentals of those travel industries, especially cruise lines, airlines, etc. Okay, so the last poll that we had today was actually on the market direction. Okay. Okay, so right now, what you can see here, we asked, where do you think the market is heading? Okay, majority thinks that it likely is going to be a sideways and consolidation. Okay, sideways and consolidation is a big movement. So I mean, it's a big saying in terms of, it's a big range in terms of the current market. So if you are going to see a sideways from this at this level, then yep, this is what clients are actually looking, and investors are actually thinking of. Okay, the rest is quite equal, I would say. But strangely, what we can see here is that lesser people are actually thinking that it will test an all-time high. Okay, I mean, this is just for just a consensus, getting a consensus. So do note that this is not the actual reading of what the whole market is about. Okay. Okay, with that, okay, if you have any questions, do reach out to the Global Markets Night Desk here. Okay, so we are here to help you with your US trading and also Europe trading. Okay, and our email is there. Okay, if you have questions that needs to be answered, you can contact us or contact your trading representative. Okay, do help us to fill up this feedback form, post-webinar feedback form, so that we can improve on our future webinar. And right now, we will be looking to answer on the questions that we have. So do stay with us as we look into your questions. Just give us 1 or 2 minutes. Okay, so we have a question here on the view on the gold and silver market. Sorry, give me a moment. Okay, so right now we have the view on the gold and silver market. Like I was mentioning previously on the GLD chart that I was sharing previously. Gold in the short term is likely to continue its uptrend. Okay, so thinking of if you are thinking to sell away gold, I probably would not think as if you have. I mean, if you really need and really need the money to invest in other products, sure. But I would think that gold is actually a good asset to hold on to at the moment. So as silver, and also you guys need to know that silver is actually more volatile than gold. Okay, back in, okay, let me just show the chart on silver. I think we can see, I hope the chart will show some price movement on silver. Give me a moment, let me just share the chart. Okay, give me a moment. Okay, so the SIVR silver ETF. Okay, right here you can see this is actually a huge movement that we are talking about. And you can see gold has been on an uptrend, but silver didn't do much. Okay, so one way people like to think that this may be a lagging one. So there may be a chance where this will actually also be on a bull market as behind the gold market, behind the gold pricing. Okay, so let's take a look at the near-term pricing. So from $18 to 11, 40%. So when you say it's a hedge against the market, probably not so much, but this price movement is what I meant by the volatility of silver price. Okay, and of course we can see that a huge run and a recovery in the near term as well. But fundamentally, both should move in the same direction. Okay, we saw gold also retracing a lot. Okay, let's take a look. So gold movement was here when the price came down. So yeah, about 10-20%. But silver actually went down 30-40%, much more than what gold actually moved. So when you want to invest, I would say that gold is actually a more safer choice. In the sense, it's not as volatile as silver. Okay, that is the first question. Let's take a look at what do we have. Okay, it will be very hard for me to share on TA for a lot of individual stocks. So because it's actually very time consuming, we tried to look out for questions on the US market. Okay, so just give me a moment. There is also one question on 20-day, 50-day, and 200-day moving average, and when do you look at it? So for those that doesn't know how, that don't know how to use the EMA, it's pretty easy. It's actually the chart will actually populate itself. You just have to read it by using it as a support and a resistance point. Okay, in a short term where I was mentioning just now. Okay, it just shows the price movement to average out the price movement for the past 20, 50, and 200-day, so that you get a sense of where the market is actually heading. And you can see the price of gold in this case is actually sloping upwards. So the slope is also actually telling you the direction of the price that is moving at. Okay. So chart wise, I will not go through more. Let me see if there's any others that we can look at. Hold on. So the next question that we have is the possibility of the US market testing the March low over the next 3 to 6 months. So we have Zhi to answer this.
Okay. So regarding this question, personally, I do not think that the US market is likely to retest the March low over the next 3 to 6 months. Why? Because most of the negative news has already been out, and uh, and we are going to have reopening of the economy. And as we can see from the index, the three major index have recovered about more than half of the fall in late February till March. So personally, I do not think that the market is going to retest the March low over the next 3 to 6 months. Personally, for me, I think that the market will just consolidate sideways, given that the huge run up from March low until today.
Okay, and if you've seen the charts that are actually Zhi actually presented previously, Nasdaq is actually performing way better, likely due to the reasons that that he has mentioned. Also, people working from home, people using the technologies much more than before. So that may be the growth factor that we can expect. Okay, we do have a lot of questions here. Just bear with us. Okay, the next question that we have is, do you think the large cap and the growth stocks is a bit too high now? Probably is it a bit expensive that what we are looking at? Should we buy on pullback?
Okay, so given that those large cap and growth stock has gone up so much, right, since the March low, if you look at those individual growth stock or large cap, it's a very steep vertical from the chart. So they have run up a lot. So I think it would be dangerous and risky to chase this stock. And if you would like to enter this stock, I think it would be wise to wait for a pullback. As yesterday, a lot of this growth stock has suffered a little bit of profit taking, and given such huge run up in stock price, right? When there's profit taking, right? We can expect the stock to fall maybe 4-5%. So do bear in mind to have a cut loss plan if you want to chase such stock. And currently, from what I see yesterday, right, there could be a rotation from such growth stock moving into cyclical stock like yesterday, casino, airline, or cruise line related stock, or even banking stocks.
Okay, so the next question is what is the thought that we have on the market level if USA and Europe suffer a second wave? Okay, so I believe Zhi actually mentioned that the risk factor is there for second wave, and if it's worse than the current outbreak, then we can expect the market to turn down from whichever level that is. But currently, right now, a lot of countries are opening up, and we are still. I mean, this is a speculation. We cannot just use what we are seeing right now. Is not there is not second wave. It's just probably just small clusters forming, but it's generally still well controlled. Okay, so in terms of second wave, we can expect easily the market possibly is going to test the March low, and probably go down even further. Okay, because if the second wave happens, businesses that actually burning through cash right now will suffer a lot more. A lot more companies are going to go bankrupt. Okay, and this definitely will not do well for the economy. More unemployment, people will spend less, and this is a vicious cycle that will continue, and eventually, I mean, stock market will find that it's way too overvalued. But right now, support from the Fed and the government is actually helping. They will try to help the economy as well. Okay, so we'll have to see if the second wave, what is the impact of the second wave first before the economy impact, and also the stock market. Okay. Okay, the next one is that are we still in overall uptrend and the current situation is just a correction? Okay, in terms of that, right, we need to know that what the people in the markets actually says 20% down from the all-time high is what we call the bear market. So just actually shared with you the chart as well. It's more than 37%, about 35 to 40%, I would say, from the peak. Okay, so we can actually classify that as already a bear market. And right now, this may be just a short-term retracement from the bear market, we call it. Okay, but from what I just shared with you on the S&P 500 just now, the prices actually has crossed the 200-day moving average, which is usually, as we can see, a strong resistance point. Okay, so if it moves up from here, there may be a chance that it will test the high, and of course, there's also a chance that it may just consolidate and move sideways from here, waiting for the moving average to consolidate nearer. As you can see, the direction of the moving average right now is more flat than having a slope up or down. Okay, so that is with that. Okay, the link for the German webinar, sorry, for the Europe webinar, right, is actually in the chat room. Okay, do find it there if you have missed it previously. Okay, let's see if we have anything else here that we can answer. We will try to take 2 more questions before we end off. Okay, the next question we have here is, are the airlines company a good buy compared to the other companies? Okay, so Zhi actually mentioned the airline yesterday really performed very well. Okay, up over 10-15% yesterday. Okay, so let Zhi actually explain on whether is it a good buy.
Okay. So personally, right, I do not like the airline industry. Why? Because the profit margin is very thin, and even after the COVID situation, right, now with new social distancing measures, so maybe per plane last time you are able to feed 100 people. Maybe now you are going to can only feed 60 people. So there will be less passenger per airline. When the airline right, the cost will still be the same. The fuel cost to fly from point A to point B will still be the same. And the airline only rebounded one day. There's only 1 day of rebound, which is quite recently. And while the market has went up so much, right, the major index running up about 30%, but the airline, right, if you see from the chart, right, they are still trading in a range near the March low. It's only a few days of rebound. So personally, on a fundamental level, I do not like the airline industry because their profit margin is thin, and if the lockdown situation continue, right, and currently we are also unsure when the airline will be able to resume back their operation. So currently a lot of airlines, they are burning cash right now. So there might be a risk that the airline industry might consolidate, or some of them might go run out of cash, and there might also be fears of rights issue. And as investor, you have to be prepared to put up more cash if that happens.
Okay, so we will just choose one last question. Give me a moment. I think let me see. Probably we missed out on the question. Just now, it was, are we still in the tech bubble? And give me a moment. Okay, are the FANG stocks overpriced? Okay, right now, Zhi will share with you on the view.
Okay, I do not think that the FANG stock are overpriced because a lot of these tech companies, right, they have a lot of cash on hand, and also they are looking for ways to expand their business. For example, Facebook recently they just launched Facebook Shop, and with their cash on hand, right? So over the last few years, they have used the cash to buy a lot of small companies to further expand their business. So as long as business can keep growing and can diversify their business, I think the rise in share price can justify that. And also, if you look over the past year, right, whenever there's a plunge in the index, let's say when the Dow Jones fall 800 points, 1,000 points, right, one of the first few sectors, right, which always recover first, right, is actually all these FANG stocks. And just recently, right, with the COVID situation, right, all the FANG stocks have reported fair to good earning results despite the bad economic outlook. So personally, right, I think investor can look to buy FANG stock on the dip to accumulate them on a long-term basis.
Okay, I think that's all we have for today's webinar. Okay, so on the screen right now, you can see the QR code and link that we shared on the post webinar feedback form. So just give me a moment. Let me just put back. I will be posting on both the feedback form and also the Europe webinar link. Okay, so these two links are for you. Okay, the webinar you can tune in to actually listen to the Europe market, and also you can also help us on the post-webinar feedback form, and so that we can improve on our future webinar. This is a monthly webinar. Okay, so we will have one at the end of June, and we do hope that you will sign up for our webinar as well. And I will be sharing with you on the technical analysis once more. And thank you so much once again for tuning to our webinar, and good night.